Hello everyone, welcome to this week's weekly market view for Monday the 16th of September 2024 to Friday the 20th of September 2024. My name is Vishal, let's get started. Alright, so let's start with the Nifty chart. So we have the daily chart in front of us right now, and here we can see that the Nifty gave a strong move to the upside in the last week, creating a new all-time high. Now we are currently basing over here, and yet it is difficult to ascertain that whether this will be a continuation rally-based rally to the upside, or this can be a potential rally-based drop to the downside. We can see very clearly from here, the market has given us a bounce. We had a slight violation of this level here, but taking this into consideration that the markets were or have printed a new high, there is obviously going to be some level of demand located over here on the smaller time frame. So it'll be interesting to see now if the market does give a pullback, a retracement. As we can see, the highest put open interest is at 25,000 odd level. So 25,000 is going to be acting as a strong support for the Nifty. And to the upside, we have 26,000 as a strong resistance. Let's move on to the Bank Nifty now. The Bank Nifty has also now come into this tested level of supply. And currently, there is a fight going on between buyers and sellers here. We can see 52,000 is the strong support on the market over here. And we also have a resistance level here at 52,200 within this level of supply. Last time around, when the price did get in over here, we saw a strong fall in price. There could be another fall in price again from these levels, but it will be interesting to see now because the open interest levels have shifted a little bit to the upside, indicating that there is a possibility that Bank Nifty might tend to push a little bit more further to the upside. So let's keep a close watch on this supply zone, 52,146 to 52,782. And on the downside, we have this level of demand, which is over here, close to 49,926 to 49,603, which is far away from current market price. Let's move on to the Nifty Financial Services Index. As you can clearly see that after printing a new high, this is where profit booking is coming in. 23,800 is acting as a strong support. And now we see that the prices are also struggling to close about 24,000 odd levels. In case if the market doesn't close about 24,000 odd levels, we might tend to move a little bit more to the downside or in a consolidated pattern on the Finnifty. 23,800 is going to be a key level where 23,800 is going to be acting as a strong support for the Nifty Financial Services. Let's move on to the next index, which is the MidCap Nifty. And here you can see that today being expiry for the MidCap index, we are seeing that the levels of support and resistance are, trying and, coming closer to each other. So now there is a fight between buyers and sellers between 13,400 and 13,300. 13,300 is acting as a strong support on MidCap Nifty, and 13,400 is acting as a strong resistance. So for this expiry, we expect the MidCap Nifty to be range bound between 13,400 to 13,300. When it comes to the demand and supply levels, we have a nice level of demand over here, drop-based rally, and a strong move to the upside. Let's move on to the next index, which is the Sensex. And on the Sensex also, we have printed a new high, just like the Nifty. And here also, you can see a very similar looking level of demand on the Sensex as well, giving a nice move, which means that probably there is something still located within this area on the smaller time frames. On the open interest front, 83,000 is having the highest open interest level on Sensex, and that is where you exactly see prices are currently struggling. In case if price fails to break above 83,000, then we might expect to see a corrective move on Sensex up to 82,000 odd levels, where the strong support is or the highest put open interest is located at 82,000 levels. Let's look at the Bankex index now. And if you look at Bankex, again, we are within this area of supply. It's a little bit of an ugly supply as compared to the Bank Nifty, but here you can see that there are a lot of confluences that are currently taking place between or in between the supply zone here. 59,200, 300, 500. Also, Bankex is having its expiry today. So it'll be interesting to see how the Bankex index performs today, taking into consideration that today is expiry. On the demand front, very similar to the Bank Nifty, we have a level of demand on Bankex, and we also have a 57,000 put open interest level lining up within that level of demand. So currently we are in supply and very, very far away from demand. So we might expect to see some kind of a corrective move coming into the Bankex index. Let's now move from the indices to the heavyweights. Let's start off first with HDFC Bank, and let us see what HDFC Bank is doing currently. So if you look at the HDFC Bank chart, as I mentioned that it has taken a very, very nice support at 1600 levels. It is struggling. There is no doubt about it within here. But what I feel is that in case if HDFC Bank gives a strong breakout to the upside, then the first target on HDFC Bank will be 1700 odd levels and 1800 odd levels, which indirectly will also propel the Bank Nifty to move to the upside. So it all now depends on what and how HDFC Bank is doing. And it'll be interesting to see what it does once it breaks this level of supply. All right, let's move on to the next heavyweight, which is Reliance, and let us see how the levels on Reliance are stacking up now. So Reliance has been consolidating and consolidating for a very, very long time. The key levels of supply on Reliance are located at this area over here. So this is your supply zone from 31.49 to 32.23 odd levels, and your level of demand is right here. Okay, so that is from 27.06 to 26.49 levels. We are currently right in the middle, so we might expect to see consolidation, or we might expect to see a little bit of bearishness coming on Reliance, taking into consideration how the overall market is also going to be reacting. Okay, so let's now move from the index and stocks to the world of commodities. I'm going to load the commodity layout here, and let's go through some key levels for commodities, starting with gold. So let's start with the gold chart here. And so we have moved strongly on gold, which was more or less the anticipation that gold was going to move further to the upside. But now we are coming into a very, very interesting and key level over here, which is this rally base drop supply zone with a gap. We also have a confluence of open interest level at 74,000 levels. So this level is going to be a key area. At the moment in time, it's not a good idea to go long in gold. So if you are already long, then maybe you might tend to see a little bit of profit booking coming on gold within this supply zone. And the target could be 72,000 levels to the downside. So just be a little bit careful. As the price is coming into this area of supply, we might see some profit booking coming on gold. All right, let's move on from gold to the next commodity, which is silver. And silver has also seen a very, very nice up move. I was probably expecting some kind of a little bit of a selling pressure coming over here, but that has not happened, and the prices have moved strongly to the upside. So the next key levels on silver are going to be this entire area over here, this so-called rally-based drop, 91,813 to 94,493. So it is very likely that gold and silver might both hit supply at the same time, and we might see a correction in both the commodities. All right, let's move on to the next commodity. Let's change the chart from silver to copper. So if you look at the daily chart of copper, copper has been consolidating, and we were expecting to see copper move from this level of demand. Right now, it is more or less trying to create a reversal pattern on this commodity. It's also printing higher lows, indicating that copper wants to push to the upside. But there are a couple of barriers on copper before the price actually moves to the upside. So the first barrier is going to be 810, then 820, and then 830. unless and until copper closes above 830, it's going to be difficult for copper to move and sustain its move to the upside, specifically when we are having this very, very good supply zone located around 838 to 851 on copper. So let us see now in the coming few days or in the coming few weeks if the commodities do give us a breakout and helps copper to move towards the 840 handle. Let's move on to the next commodity, which is natural gas. And let's quickly analyze that. So on natural gas, I already have some key levels plotted. In fact, last week we had this level of supply already plotted. And as you can see here, the moment the price has come, we are seeing a pretty strong, significant reaction coming from this level of supply. Also, we have a confluence of open interest lining up with this level of supply, indicating that probably there could be some unfilled orders within this area. So it will be interesting to see now if natural gas begins to correct. We see that 180, 185 levels could be acting as a strong support on natural gas. But now, since the price has reacted from 200 levels, we do expect to see a natural gas moving towards 185, 180 levels in the short to near term. All right, so pretty much this is it from me for this week. I hope you enjoyed the analysis. And if you do like our analysis, hit the like button and do become a member of the Sher Khan Education YouTube channel. At the same time, give your valuable comments so we can always read your comments and come up and you can come up with whatever suggestions that you have so that we can include it in our next week. Have a lovely trading week, everyone. See you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.